What is up, you guys? In this video, I'm going to talk to you guys why you should not be investing in Intel. This is my portfolio on Robinhood, right? I've been growing my portfolio year after year. Want to show you this just for some credibility because there's a lot of people on YouTube that don't know what they're talking about. I just want to put that out there. Like, I see it time after time. This is all my hard-earned money, growing it year after year. Every year, on average, it's been about like 50%. You can see here, I put 1 year here because we're in January still, so year to date, it'll be like very low because we've been pretty much going sideways. So the last year, I closed at 50%. This year, I'm going to be a little bit more aggressive, on the aggressive edge, and aim for a 75% increase in the portfolio. And this is one of the portfolios. I also have another one on Webull, and I have currently a lot of cash on hand waiting for dip opportunities in the market. So I personally think that we are going to be seeing some opportunities this year. I'm going to be saying on April, ideally, because everything right now is running really smoothly. But let's talk about Intel, why you should not be investing in Intel, right? So Intel, right? A lot of people see, oh, it's $46. The average investor would be like, hey, $46 isn't that cheap. It could go to 400. Who knows, right? I want to talk about the financials, right? Because when it comes to investing in stocks, what you want to be knowing about is like, what is a good price, right? Just because it's a low price doesn't mean it is cheap. So you have to also look at the PE ratio. You have to look at the intrinsic value. You have to look at the market cap. You have to look at the balance sheet, the cash flow. You have to really analyze the business. That's when you're gonna find the stuff. What's the company really worth? Wait, I'm a little sick. So let's get more into it, right? Because what I always like to do here is I always like to use the Fibonacci. I would probably go something similar like to this here and kind of like use it to kind of see where we are with the levels, right? Yeah, see, this is playing out pretty well here, just off this. So you can see resistance, support, break this levels. It looks like we're gonna be hitting that 50 mark, or it could have just bounced. See how it bounced on that wick right there? I can zoom in for you guys here. Zoom in. See how it right here bounced right on that wick, same mark. Now it's downtrending on the weekly. I'm going to be honest, I don't see Intel doing really well in the future just because of their financials, right? Let me show you guys this. Let me just show you guys this. And also, by the way, if you ever wanted to follow my exact trades or anything like this, I just made a school, it's not really a school, but it's the school platform, right? So I have where you can get my live trades always, and it's only $35 a month, and you can always get live notifications exactly when I'm buying, so that way you can grow your portfolio as well, 50 to 75% every year, because we're in it for the long game. I try to make it affordable for everybody, so that's there. If you ever want to check it out, you could. It'll be in the description down below and in the pinned comments as well. But let's go to what I like to use, right? Let's go here. Chrome, and then we're gonna go to Google Finance, right? This is what I like to use. So let's look at the PE ratio. Look at this, guys. I'm gonna zoom in for you guys. 4,429 PE ratio. Yo, that is probably one of the highest PE ratios I've ever seen in my life. Like, that is insane. That's ridiculous. You gotta stay away from this company. This is bad. So let's go also to the balance sheet, the income statement. Let's get really into it. Let's go and see how much money they're making. And I'm zooming in for you guys so you can see the annual. You can see this is from 2020, and they've just been losing money every year in revenue and net. And last year, 2024, well, Not even, they haven't finished 2025. 2024, they lost $18 billion in net profit. They didn't even net profit. They lost 18 billion, not million, 18 billion. Jeez, that's crazy. They just wiped that. So yeah, quarterly they're not doing that well. I mean, it's been pretty stagnant. The last quarter they made 4 billion, which is good, but they also have a lot of kickbacks from the government, things like that. But still, that's not going to save you if you're a company like this. Like, it's just crazy. The PE ratio is crazy. The financials is crazy. What the stock is representing is pretty much supply and demand, right? And it's literally supply and demand. Like, any bad company can be going up just off supply and demand, pretty much. If people are buying the stock, it's going to go up no matter if the stock is, no matter if the company is bad, but it always ends up catching up eventually one way or another. That's why I personally think Intel is, you want to just stay away from it. If you're already holding it, you might as well, you could hold it, hope for, it to make higher highs. I just don't see it personally. I just don't. And I would sell here, to be honest. I would look at other companies. Let me show you guys some more stocks that I would look at, to be honest. Adobe's a good one because it is at my buy zone. And let me show you guys why Adobe, look at this compared to the other stock, right? Let's go here. Let's go back here. Right, look at Intel, look at the PE ratio. You want this PE ratio to be like 35 or less, really. Adobe. This is what you want to see in a company. Look at this PE ratio. It's 17, which is amazing. It's really good because it's been downtrending. It's like on sale right now. But I want it even cheaper. I want to be real greedy and I want to get it and make 3 times the money, 4 times, 5 times the money. That's what we're here for, right? So it's just downtrending. AI is just picking up massively in the market, and but look at the annual. Look at this annual. You see how it goes up? You see how that net income continues increasing year after year? You can see this annual income of last year was 7 billion in net profit. Net profit is what they're taking home. Gross revenue does not really matter to me. The net is what matters, and this is a solid company that grows year after year, and that's what you want to look for when it comes to investing. You want to look for solid companies that you're not gambling your money with, because we work hard for our money, so you want to make more money, right? And you want that money to work for you in the long run. Stay away from Intel. Adobe right now is a good one to look at. Netflix as well. There are a couple on my list as well. And if you want my exact trades as well, you can always join that thing and I'll give you guys live notifications as well. Or you can just subscribe to this channel for free. Hit that like button. I really appreciate it. All it just takes is 5 seconds of your time, maybe less, and it gives me a lot of support. And also, if you want me to talk about any stocks, leave them in the comments down below. I just made a video today of somebody that left, it was actually Adobe, that they wanted the video of it. I made it today for them. And yeah, I'm actually going to be buying 50K worth when it hits my price range as well. That's about it, guys. I'll see you guys on the next one. Peace.